Hey guys, this is Mr. Oxy coming at you from Palm Beach in Florida. It is Saturday. It is May the 8th. And for most of you who've been following our channel and chatting and communicating with us, we will know that we are just 2 days away from Occidental's earnings report for the first quarter of 2021. Man, like a prized MMA fighter. So if you follow MMA, think of someone like George St. Pierre. It doesn't matter how much you've prepared and how much homework you've done, you're still nervous, right? You're going to step into the octagon. You're going to face up to Wall Street, sentiment, emotion, analysts, and then you're going to deliver your best performance and see what happens. Unfortunately, sometimes in MMA, you get knocked out in the first round, and sometimes you manage to knock your opponent out in the first round. So who knows where this one's going, but we'll see what happens. So I put together a little presentation for you guys, and I'm going to call this one the Bulls versus the Bears on Oxy. In fact, you know what I'm going to do? I'm going to see if I can just cancel my my video there. I'll take myself out of the picture and just keep chatting with you guys. So Bull versus Bear, what's going on, right? So what we want to do is have a discussion about this. So firstly, I'm going to share with you some of the comments from our community, and man, you guys are like super awesome. The way in which you interact and in which we can help each other sort of get educated and learn what to do, what not to do, and kind of just get an alternative view and sometimes a contrarian opinion on whatever your narrative or your investment thesis is just great. So I just pulled out a couple, some of them which are sort of bullish, or some of them bearish, and some of them just interesting. But let's take a look at some of these. So Marcos said, I don't know if I want to hold Oxy during earnings. I did actually chat with Marcos, and I said, it depends what your cost basis is, I guess. Marcos said, I'm a swing trader. So that's a different philosophy in terms of how you trade and what you do. For people who are long in Oxy, especially if you were fortunate enough to pick up some Oxy stock while it crashed last year all the way down to like $8 or something like that, you probably have a reasonably low average cost basis. So when the price is about $27, even if Oxy were to tank, for example, 10%, that's $3. You go down to $24, you're still sitting on 100% gain in theory. On the other hand, of course, your upside is infinite, because Oxy could, over the next year or two or whatever, go to $100 or $300. The fact of the matter is your losses are capped by whatever your investment value is. Hans sent quite a few messages. I just picked out one of them, and Hans was saying, I looked over who beat earnings in the last 2 weeks, pretty much all of them except Chevron. I really dread another negative 8% to enter the summer with bearish momentum. Yeah, Hans, I agree. That wouldn't be good. It wouldn't be a nice feeling, especially using my George St. Pierre analogy I just used a minute ago. You've given it your best shot. You've prepared as good as you can, and then you end up with a negative 8 or 10% based on the performance of the stock. Tim said, hey, Mr. Oxy, the estimate, okay, so an estimate is a bit of a guess, right? Doesn't matter who does it, including me. So it doesn't matter how much information you have or how much homework you do, you'd have a really tough time predicting the EPS accurately. But he did ask, what do we have to do to get into positive EPS territory, Rudy? And I replied to his question on the comment section. And, there's a couple of things there. I said there's a confluence of good events. We have strong free cash flow. We have a good price. We have recovering demand. A good price, I mean, in terms of commodities. We have recovering demand. We have consistent production. There's a number of things that are favorable to Occidental. Not too many things that are maybe not favorable. Andrea asked the question. She said, I'm up 3.57% in Oxy right now. I'm a beginner. Should I sell my shares before the earnings? That's a tough one, Andrea. And as I explained in my comment to you, or my reply to your comment, why would you have invested in Occidental in the first place? Because if you're happy with a 3.57% return on your investment, then you should probably just exit. Otherwise, you need to kind of revisit and say, why am I in this position in the first place? Kevin, who's a regular, by the way, who also has a YouTube channel you can follow on Oxy, because he's boots and all into Oxy, talked about the home run for Energy Transfers Q1 just a few days ago. Let's see how Oxy will do next week. John Hibbs, cool comment here. It's I added this one just for the fun factor. Always do exactly the opposite of what Jim Cramer says. Jim Cramer said energy was dead. He's also on TV, and probably you can find it on YouTube if you look for it, saying sell Oxy, sell Oxy, sell Oxy. That was when Oxy was trading in the low teens. Calvin says, hey, Mr. Oxy, how long do you think it will take for the dividend distribution to go back to the previous level? Calvin, as I said to you in the comments, I don't know. In fact, I'm not even sure the people at Occidental know right now. They just want to recover, financially fix the balance sheet, address this lingering issue of the wall of debt, and then move on and maybe return some funds to the shareholders from that point forward. However, Oxy can print money like it's going out of fashion as the price for especially WTI keeps increasing. So I might have to revisit that comment in the very near future. I'm not sure. I'm guessing maybe 2 to 3 years. Isaac made an interesting comment here, which is actually not related to Occidental specifically, but to another company called Athabasca in Canada. He makes mention of the fact here that Athabasca effectively will go bankrupt below $50 WTI. The flip side is that above 60, they print money. Now, Oxy, in theory, could go bankrupt with WTI significantly below $40 because their cost basis is, their break-even point is sort of in the high 30s, according to Vicky. The flip side is also that above 60, they print money. So let's see how much Occidental printed this past quarter when they report for us early next week. A quick look at some of the not so smart people, because most of the smart people are in our community and following our channel and communicating with us on a regular basis. So these are the people who are slightly less smart. So as I just mentioned a minute ago, the comment from John was do the opposite of whatever Jim Cramer says. The street basically is Jim Cramer. They have a sell option here, call on Occidental. This is quite recent, May the 2nd. So it seems as if Jim Cramer is still saying sell, sell, sell. But who knows? Occidental, May 1st from CFRA, Steve Klickman. A couple of interesting things here, 12-month target price of $30. It's also got an interesting little paragraph here. I'm just going to read it very, very quickly to you. In 2018, Oxy had a large oil and gas growth engine complemented by chemicals business that returned strong cash flows, and as such, it was relatively moderate risk. After the acquisition of rival Anadarko and paying a high coupon on his preferred stock, the preferred stock being to Berkshire Hathaway, and the coupon is 8%, it dilutes the existing shareholders, and although much of the near-term pressure from debt milestones was alleviated in 2021, it will return in 2022. Steve, that might be true depending on the price of the commodity. So maybe that's something you can revisit as well in the future and update your call once we get some clarity around that. New Construct says Occidental remains unattractive. We recommend that investors avoid Oxy. This is not a surprise. They've had that same theme and narrative for quite some time. They also say that that Occidental is an unattractive rating, which means it has more downside risk than upside potential. The research team, RT, says reduce negative 32% since they changed their current rating. And then they tap into some other people's research information just to kind of share some information. What's interesting to me about research team, and the only reason why I even added this analyst slide at all, is because research team has an accuracy rating of only a third in terms of their analysis reporting. So if you do want to follow any analyst, make sure that one of them is not research team, because they are wrong 2/3 of the time. Forward equity research, a couple of interesting things here. Observation is they rate Oxy currently a 4. We project Oxy will underperform the market in the next 6 to 12 months, and it's based on our analysis of 3 key factors that influence common stock performance: earnings strengths, relative valuation, and recent price movement. We'll have to see what happens, because we don't know exactly what is going to be reported next week. And in much the same way, forward equity doesn't know either. This one is from Morningside, Market Edge. Market Edge says avoid. Now, this is an interesting one for a different reason, because if they have the chutzpah to say avoid Occidental, they should be able to say Occidental is a good candidate for shorting. So it's an interesting dichotomy here, because they actually almost contradict themselves accidentally. They say avoid the stock, It's up 11% since the downgrade, and it's not a short sale candidate. So once you make up your mind, let us know, and we'll take it from there. In the meantime, most of us will just wait patiently for 2 days to see what Occidental is going to report. This was Friday, guys. That was yesterday. Oxy was up 3%, so you have a nice little buffer going into Monday and Tuesday next week, because Oxy has been giving a little bit of uptick generously to us over the past few days. You can see based on the little slide over here, its momentum has been mostly positive, and hopefully it can continue that as we go into early next week. So I put together a quick little slide here, and I just sort of touched on 4 different bullets, because I thought, what exactly is the bear thesis? And then comparatively, what is the bull thesis? So the bears are still saying Oxy has a wall of debt. We'll get some clarity on that in the next 2 days. Demand, is still impacted negatively by the coronavirus pandemic. And now, of course, the most recent news is out of India. What you do is you take the strongest growth economy in the world currently, which is India, and then you pull it back and crush it by publishing bad news about India's coronavirus pandemic every single day. Now, I have shared information about this before. I'm not denying the fact that India has a coronavirus pandemic. The fact of the matter is, and you could look this up and fact check me if you'd like, especially if you can find a reliable source, the mortality rate is exceptionally low, regardless of the fact that the so-called cases are incredibly high. Most people, including the people I speak to in India on a regular basis, in fact, almost weekly at the worst, have informed me that it's generally business as usual. They do silly things like masking up. They do social distance, all those things that we were told by our government is going to flatten the curve over 14 days. And here we are 14 months later, and it hasn't flattened the curve, but we'll see how we go. Anyway, those are the things they talk about. The Texas storm is definitely a sort of micro impact on Occidental's Q1 performance, because there could be some downtime and costs related to that. And I put accounting surprises in inverted commas, because this relates more to GAAP accounting and how they are going to report certain things that happened during the quarter. How about the bull thesis? So fact of the matter is free cash flow. As I said earlier on in this presentation, Oxy is printing a lot of money at 60 plus dollars a barrel on especially WTI. Most people agree, regardless of what the media tells you every single day, that demand is recovering. In fact, demand is growing quite healthily. The commodity prices I just mentioned a second ago, obviously is edging higher and higher all the time. We've got Brent near 70 and WTI at around 65. And of course, Oxy has some of the greatest assets in the Permian Basin. So what I want to do, just very briefly, and let me just put myself back on the screen here and take this video away. What I wanted to do just very briefly is talk a little bit about that accounting surprise, which I put in inverted commas, because I'm referring there to GAAP accounting, GAAP, which is the General Agreement on Accounting Practices. As a general rule, you can report your numbers in ways that are inconsistent with perhaps the way in which other people would report those kind of same numbers. So what I mean by that is, if you take a company, and actually, let me give you a practical example. In accounting, there are basically 2 types of dominant methods to record your revenue. So one is called the accrual method, which I adopt and use as well for my businesses, and the other one is called the cash basis. And you can sort of think of it from a cash basis point of view. You can say it's almost like a retailer, right? You can only count the money that's in the cash register. That's cash basis accounting. The accrual one is a little bit more sort of, let's call it grayish in terms of how you report things. And I'm going to give you a practical example here just from personal experience. So one of our businesses is a charitable foundation. And yesterday we received a verbal go-ahead on a contract where we need to deliver some services in the future in exchange for revenue of $40,000, right? So in theory, I have a sale. Under the accrual accounting system, I can actually record that $40,000 sale today and then deliver the services in the future. And then as I get paid, it's basically just an account payable, which is coming in as a receipt. So that's kind of the sort of basic gist of it. The other way to do it, it would be to say, you know what, let's just assume it's 10 equal payments of $4,000. Every time I deliver services, I generate an invoice for $4,000. They send me a check for $4,000, and as soon as I get the check, I record the sale, and it's a $4,000 sale. Why is this important? The fact of the matter is this, and I'm using my charitable foundation as an example specifically for this reason, because it's a tax exempt organization. So there's no motivation for me to try and manipulate or massage my tax reporting, because it's a tax exempt organization. But large organizations, so let's say like Boeing, they do this all the time. They get an order from a country. So let's say, for instance, the Qantas airline in Australia orders 100 787 jets. Those jets might only be delivered like by 2035. So using my same example that I just used for my charitable foundation, um, if if Boeing wanted to make their quarter look good, they can just record that entire sale under the accrual system this quarter, regardless of the fact that the delivery of the jets in the future is going to be at a future date, and that the money is probably going to hit the books over the next 15 years. You get where I'm going? So that's kind of the things that you can do from a GAAP accounting reporting point of view. And that's why I say there's always kind of like a little accounting surprise, right? So we see this, for instance, on impairment charges, or how much depreciation did they sort of book for a particular period, or what was the asset value on paper and how much did they actually sell it for? And you can think of this just from a personal point of view. Let's say your house is worth $100,000. It's worth $100,000 based on what? The fact that houses around yours have been selling for around $100,000. It has no tangible value until you actually sell it. So now if you sold it and you said, okay, I sold it for $80,000, then you can write off $20,000 depreciation, right? So these are all legal things, and they just kind of like, I'm not saying anyone is manipulating the accounting. What I'm saying is that accounting is sort of a grayish area where you can do things to suit yourself when and where it suits you. Anyway, I hope that's a bit helpful, because one of the challenges about sort of trying to predict earnings per share is that earnings per share is the sort of net result of all the things that happened during the quarter or the year or whatever the case might be. And all that stuff in between is sort of a combination of accounting. And sometimes that accounting is very, very creative accounting. So guys, I'm cautiously optimistic for Occidental for this quarter. I'm not overly concerned. I'm not selling my Occidental stock. My cost basis is way below the current stock price. If Oxy goes up to $30, that'd be great. If Oxy goes down to $25, $24, that'd be horrible, especially for the first few days or so until I kind of overcome my own emotion. But that's kind of where I'm at. I'm not selling. I'm just holding. If it does drop a lot, maybe I'll buy some more. Maybe I'll just hold it. Anyway, as I've said many times before, my initial timeline was 3 to 5 years, and that was a year ago. So my timeline is about 2 to 4 years in terms of holding Oxy. I have no intent to sell it unless it suddenly spikes. If Oxy goes to 50, 60, $100 per share, I'm going to revisit this comment, and I might even be contradicting myself. Anyway, on that happy note, hold thumbs for Monday, Tuesday, and have a great weekend. Bye-bye.